For this session, we will go to the second part of our introduction to government accounting. Previously, we have discussed already your government, the concept of government versus your commercial enterprise. We also talk about your government accounting per se, the functions, the users, the objectives, the definition of your government accounting. Yeah, okay. Now we go through the next part of our discussion for introduction. First, we will discuss here your distinction between government accounting versus your commercial accounting. After discussing the difference between the two, we will also talk about your salient features or features of government accounting. And then finally, we will talk about your responsibility accounting. So let's start and discuss the difference between government and commercial accounting. So here are the differences between government accounting and commercial accounting. First, as to your objective, we already know that the government accounting, the main function is for decision making and the utilization of your funds and your properties, particularly if ever they are efficiently and effectively used. However, for commercial, we also said that in your commercial accounting, the objective mainly is decision making. So in your commercial, one objective only mainly, but in your government, we have two. That includes your utilization, your stewardship. Next, as to your basis. The basis of your commercial accounting is cash or accrual basis. So cash, everything is recorded in cash, expenses are recorded in cash, income are recorded in cash. Accrual, income is recorded when earned, expenses are recorded when incurred. While for government accounting, it is modified accrual. Why is it considered modified accrual? What is modified accrual again? Modified accrual is a combination of your cash and accrual basis of accounting. So you combine both bases, you will have modified accrual. So government accounting, as we go through the accounting process or accounting under government, we will learn this modified accrual. Now, as to your control. In commercial, generally, whatever is the fund provided by the owner, it is not controlled. So in your government, the funds or properties, we place here control mechanisms. You liken it to an internal control. And these funds or properties, the control mechanisms in place are three. We have your fund accounting, obligation accounting, and CDC accounting. CDC accounting is known as cash disbursement ceiling. Cash disbursement ceiling accounting. So these are three controls into the usage of our funds and properties. If you try to compare it to your commercial, if we have an investment, generally we don't have much internal control as to that usage of fund. It depends on how you make use of that money. However, in the government, since this is appropriated and allotted, what we look into is that whatever is the appropriation or allotment, that fund must be used based on that appropriation and allotment. That's why we have these control mechanisms: fund, obligation, and cash disbursement ceiling. Now, as to books, your commercial has only one book. When we say it has only one book, the book only pertains to the business entity. How about in government? We maintain two books. Why do we maintain two books? We maintain an RA book. This is known as your regular agency book. And we also maintain your national government book. National government book. So as we go through, you will learn how to account under this RE book or the agency book and the national government book. So again, commercial only have one book. Whatever is the book, it only pertains to the business entity. Here in your government, we maintain two books. for the agency itself and the national government as a whole. Next, we have your accounts and transactions. Under commercial, there is no budgetary accounts. When we say no budgetary accounts, we only make use of your normal accounts. What are the two main types of your accounts already? If you still remember, we call this one real and nominal accounts. Real and nominal accounts. So normally, we only make use of real and nominal accounts. In your government, we use of budgetary accounts. What are your budgetary accounts? These are your budgetary accounts from the appropriation, from the allotment, and ultimately when there is an obligation. So these are called registry books. Okay, so if we will go through your government accounting, you will see registry of appropriations, allotments, obligations, RAOD, RAOPs, etc. So those are called budgetary accounts or registry accounts. So again, commercial, purely real and nominal. So in government, aside from these real and nominal accounts, we still have your budgetary accounts as to your appropriation, allotment, and obligation, and we have your registry books. Now, as to source, in accounting for your commercial, we have your PFRSs and your different policies, your accounting policies. If you still remember, under PAS1, we can go over or go through a particular standard as long as it will result into a more relevant and reliable information. Meaning, we can depart on a standard. So instead of using a standard, we can make use of our own policies, but with a catchphrase of more relevant and reliable info. However, under government accounting, it is dictated by the law. And generally, whatever is dictated by the law, that is the plain and simple rule. That is the black and white rule, meaning you don't have any other interpretations, you don't have other policies. Whatever is provided by the law, you follow that. Therefore, if we talk about authority as to the standards used, of course, law has a higher authority than PFRSs and policies. Because generally, these PFRSs are just provided by a non-governmental organization, which is just adopted here in the Philippines. So IFRS adopted here as PFRS, but our laws are crafted for Philippine state only. That's why when we talk about authority, the government accounting has a higher authority as to accounting as compared to PFRS for commercial. Furthermore, another difference is that here in your commercial, we can create policies, a departure to the standard. However, as to your government accounting, we don't normally depart. We don't depart on it because it is the law. Black and white law, we follow that. So those are the differences. But since these are only difference, therefore, we still have your similarities. Some similarities, of course, is, as we said a while back, we can still have the same reports or financial statements. Furthermore, we still utilize the same recording of transactions, still double entry bookkeeping. We still have your journals, we have your subsidiary ledgers, we still have your trial balance. So those are still the same as to your accounting. But these are the differences. We laid it down from objective basis control, books, accounts, and transactions, and source. As to the journals and records, they are, as to the financial statements, they are the same. Differences only as to the name, but still the concept of preparing it is still the same. Okay, differences. Now we proceed to your salient features of government accounting. A while back, during our distinction between government accounting and commercial accounting, we already talked about your control mechanisms. So we control the funds and the properties of the government. We try to control that. And what are the controls in place? We have your fund accounting, obligation accounting, and CDC accounting. So these three control mechanisms are already embedded within the government accounting itself. So why do we really need this control mechanism? Of course, we need this control mechanism so that we can check that our financial resources or the funds and properties of government are properly used and that our taxes are used for the purposes it is set aside into. So let's start first with fund accounting. In fund accounting, the main concept here is that we set aside the fund or we set aside the money of the government for a particular purpose or a particular fund. So how do we decide or how do we define how do we define a fund under our law? A fund is a sum of money or other resources set aside for the purpose of carrying out specific activities or attaining certain objectives with specific regulations, restriction, or limitations. Actually, this talks about a special fund. Generally, we have two types of fund. We have a general fund and we have a special fund. So in a general fund, this is available for all purpose. While special fund, of course, is for limited and special purpose. So as a control or internal control on the disbursement of our funds and properties, we use fund accounting, meaning we specifically place our fund on a special purpose, meaning that purpose only. It cannot be dispersed to other purposes. That's why if ever you will hear some cases in our jurisdiction that this particular public employee or official is charged by a criminal case because the fund was not properly used to its intended purpose. So they know what they actually do is they get money from other funds and realign it to other funds. That is improper because you must make use of the fund to where it is properly set aside or whichever it is specified for. Okay, one control. Another control is obligation accounting. And what is obligation accounting? Obligation accounting provides the ceiling of the maximum extent by which an agency can incur obligations or commit the resources of the government in the performance of its function. So you already know the process. So from appropriation to allotment to obligation to your disbursement. Okay. So in your obligation, here, as part of our internal control in your government accounting, there is already a max amount of obligation. So based on a particular fund, a particular obligation for that, let's say personal services, that is only the max amount you will get on that particular fund. So when it is already obligated soon, or when you will incur liabilities already, you will have a maximum amount on a particular purpose for that obligation. Therefore, you cannot go beyond that. You cannot go beyond that. Again, ceiling as to obligation. Next, CDC accounting. For CDC accounting, again, this is your cash disbursement ceiling. For cash disbursement ceiling, the cash operations of the government under the cash disbursement ceiling accounting are limited within the boundaries of appropriations released to government agencies in the form of allotments. Any additional amount granted by the DBM to liquidate or pay existing valid obligation. So here we have a ceiling based on what is allotted. So again, what is appropriation? Appropriation is the act of the Congress appropriating to a particular government agency. Allotment is the release of the fund from the DBM to that government agency. So whatever is allotted only, that is the amount that you can disburse. You cannot go over that. Okay? In obligation, you cannot incur much more obligation than what is budgeted based on your fund. In your cash disbursement, what we check here is that you cannot go over what is allotted to you. Whatever is allotted to you, that is only the amount that you can disburse. You cannot disburse more than that. You cannot disburse more than that. So let's say, for example, the government agency is allotted 1 million pesos. You can only disburse up to 1 million pesos. You cannot go over 1 million because that is the only money set aside for your government agency. You just make use of that money. That's how our General Appropriations Act works. Okay? So as we go through, again, main focus are these items: appropriation, allotment, obligation, and disbursement. But as we go through these items, you know that there is already an internal control in the accounting of our government fund. These are your fund, obligation, and CDC accounting. Now, we look into who is responsible in the accounting or the usage of the government fund appropriated to a particular government agency or instrumentality. So responsibility accounting. So what is the concept of responsibility accounting again? Responsibility accounting is a system that releases the financial results to a responsibility center, which provides access to cost and revenue information under the supervision of a manager having direct responsibility for its performance. So what we do in the responsibility accounting is we look into different centers, and the head of that center is the person responsible. So looking at in a government perspective, the center is a government agency or instrumentality, be it that national government or a local government or a GOCC. And who is the person responsible? The person responsible is the head of that national government, local government, or GOCC. So under PD 1445, it provides that the responsibility for accounting is entrusted immediately and primarily to the head of government agency or office. So following the concept of responsibility accounting, the head of the national government, local government, or GOCC is the person who has the responsibility over government accounting. And this is shared to the COA, DBM, Department of Finance, BTR, and government agencies. So from time to time, they are checked and balanced by these different agencies. Okay? So what then is the duty of the head? The duty of the head of the agency, of course, is to minimize, if not to avoid, the improper usage or irregularity of the funds and properties of the government. So you need to minimize, or as much, do not create this irregularity. Aside from irregularity, improper usage of funds, defalcations, when you make use of the fund of the government for other purposes, because these must be properly used ultimately for the people and to which it is set aside for, based on what we have previously learned. Okay? Furthermore, the accountability requirement is provided under Section 1 of PD 1445 to encapsulate our previous lecture. So it is declared the policy of state that all resources shall be managed, expended, and utilized in accordance with law and regulations, safeguard against loss or wastage through illegal or improper disposition, with a view to ensuring efficiency, economy, effectiveness in the operations of the government, the responsibility to see to it that such is faithfully adhered to rests directly with the chief or head of the government agency concerned. We already know this one. Okay. Now, this encapsulates everything, including the responsibility of the head of the agency. Why? What we do here is that once there is an appropriation or allotment, it is now obligated and disbursed. Now, in your obligation and disbursement, it must be within the law, based on the different safeguards. Furthermore, it must not be disposed illegally or improperly. And take note, this obligation or disbursement is checked into three main items. First, through your efficiency. When we talk about your efficiency, we talk about whether the agency is utilizing the resources properly. That is efficiency. Next, we check it as to effectiveness. So when we say effectiveness, we look whether the objectives set by the agency or instrumentality is met. And then lastly, by economy, that is by minimizing the cost. So this particular appropriation or allotment, aside from the mechanisms in place, we will check it through these three items: efficiency, effectiveness, and economy. Therefore, the performance of the government entity is measured in the point of view of these three items. And lastly, the responsibility is with the head of the agency. Take note, responsibility is different versus accountability. When we talk about accountability, or when we talk about responsibility, this is the context of the authority of that person. So based on the authority of that person, you must work on that authority. So you must perform your authority or your obligations based on that authority. So you perform obligations based on authority, that is responsibility. How about accountability? Accountability is your answer on that obligation. So your answer on that responsibility conferred to you. So you have an obligation as a public officer or employee to answer that your responsibility is properly taken care of or properly used into and within the bounds of the law. So that is the difference between responsibility and accountability. Responsibility based on your authority, your obligation as to your authority. Accountability is your obligation compared to your responsibility. You have the obligation to answer for your responsibility conferred to you. And that is your introduction to government accounting. So in your introduction, we talk about the following. First, we talk about the concept of government. Next, we talk about the difference of your government versus your commercial enterprise. Third, we talk about government accounting, users, purpose, function, objectives. Fourth, we talk about government accounting versus commercial accounting. Fifth, we talk about your features of government accounting, which are your fund. We also have your obligation accounting. And lastly, your CDC. And lastly, we talk about responsibility accounting. To encapsulate it all, we have, again, your appropriation, then allotment, then obligation, then disbursement. Of what? Funds or properties. And we will have a financial information that will be used for decision making. And of course, for your three tests, your stewardship, this will be tested through efficiency, effectiveness, and economy. So this responsibility is within the head of the agency. We just need to make sure that this funds or property of the government is properly used based on what it is allotted or appropriated. Furthermore, the results of that will be used for these two items. That is all for government accounting introduction.